Let's start with the containers. A little bit counterintuitive. Container prices are spiking, according to FreightWaves data, 40% higher than they were last month. At the same time, we're seeing major retailers like an Amazon and Walmart say they're destocking. Inventory levels are lower. We'll talk more about that. What's going on? Is it the Red Sea disruption?
Well, the Red Sea disruption is part of it, but it's also that we're seeing, relatively high demand compared to where we were even a year ago. But really what's happening is the ocean container lines have a lot of pricing power because they have such high concentration of the market. Right. And they've been able to manage to pass on a lot of the market disruptions in terms of additional increase in pricing.
How big of a factor are the Red Sea disruptions still? The fact that a lot of ships are rerouting around the south end of Africa. How big of a deal is that still? Because we heard it was going to, might be empty shelves in Europe. I was in Europe. All the shelves were full.
Yeah.
We heard a lot of things.
Yeah, it hasn't disrupted supply chains. There's been periodic disruptions. I think automotive, particularly in Germany, in production was short-term disrupted. But supply chains are self-healing. They respond to these issues and deal with them. It's really showing up in container prices.
All right, I want to focus on the U.S. right now. We were just talking about it. Destocking, it is a thing. Walmart's inventory down 3% year over year. Amazon down 9%. Target down 7%. What are you hearing from the companies that you're working with? Are we at the bottom of the freight market, the so-called freight recession here in the U.S., or do we still have more downward trajectory to go?
No, we think, there's the volume question and there's the capacity question, two different questions. So on the volume standpoint, we actually think that the market bottomed last year and is continuing to increase. It's very marginal. It's not sharp. It doesn't feel like the COVID cycle. What is driving really soft conditions in the freight market is the excess capacity. Okay. We added 28% more trucks in the market from 2019 to 2022, which is massive expansion. The market is still trying to get rid of all that excess capacity that was added.
It feels like just yesterday we were talking about a driver shortage, but now there's overcapacity. What a swing right there. All right, here's something I know you're excited about. I know a lot of companies I cover are excited about it too, including an XPO, a UPS. The cross-border trade when it comes to Mexico nearshoring. So the most recent data from the U.S. Census shows that imports from Mexico, they're up 4% in Q1 as opposed to Q1 of last year. But from a lot of people I talk to, that's not really representative of everything that's going on. So tell me about the impact of this nearshoring trade. How big is it? How much bigger can it get?
It's very big, and it's probably the biggest story for the next decade. If the last decade was China, this decade is about Mexico and the United States and really the resurgence of manufacturing in the Americas. It's exciting. In fact, we think that the official Mexican government data from our sources underreports the impact of industrialization. Not only is it Chinese companies that are building production and distribution in Mexico, because that is happening, largely to bypass tariffs and to secure their own demand. It is also American companies and European companies that are investing in production in the United States and in Mexico that's really driving a lot of this industrialization.
So what kind of companies are going to benefit? I mean, I know some of the rails have, rail lines that go from Mexico to the U.S. You would expect that it would kind of hurt the container shipping lines because there's going to be less traffic from Asia. In your mind, what areas of transports are going to benefit? Again, transport's negative for the year, down 5%.
Yeah, I think the trucking and anything that's moving freight in on road or surface is going to benefit. So particularly companies that have high concentration of that north-south lane are actually going to do quite well. So Kansas City Southern, which is now part of CP Kansas City, the railroad is probably a major beneficiary of that. But really any company that has a large cross-border concentration is going to do well. Also look at the industrial REITs, companies like Prologis. They always benefit as freight markets get disrupted, because what you see is when there's additional demand in a market, they have the ability to build warehouses and distribution centers.